Hello guys, and welcome back to the channel. Today, we have some major updates from the world of electric vehicles, specifically about NIO China. If you're following the EV market, you know that NIO has been making waves with its innovations, government backing, and strategic expansions. In this video, we'll break down the latest developments, including fresh government funding, changes in NIO House policies, and what these moves mean for the company's future. So, buckle up as we dive into all the exciting details. Guys, we've got some major news coming out of China regarding NIO. The company has once again secured a substantial financial boost from the government, reinforcing its strategic importance in China's electric vehicle industry. However, it is crucial to clarify that this funding is directed towards NIO China and not NIO Inc. For those who might be unfamiliar, NIO Inc. is the publicly traded entity listed in the United States, while NIO China operates as its core business unit. NIO Inc. retains approximately a 90% ownership stake in NIO China, meaning this latest financial backing primarily affects the Chinese subsidiary rather than the parent company. This move highlights the Chinese government's ongoing commitment to supporting NIO, ensuring its continued growth and expansion. But what's really interesting about this deal is its valuation and implications, which we will delve into shortly. However, before we get into the details of that, let's discuss another big development: NIO Houses. Previously, access to NIO Houses was restricted exclusively to NIO owners, sparking debates and dissatisfaction among potential customers and EV enthusiasts. However, this policy is now changing. In a move similar to NIO's strategy in Europe, these spaces are opening up to the general public. This means that anyone, regardless of whether they own a NIO vehicle or not, can visit a NIO house, enjoy its amenities, and experience the brand's lifestyle offerings. This shift serves multiple purposes. First, it aims to drive more traffic into NIO's retail locations, increasing brand awareness and consumer engagement. The idea is that repeated exposure to NIO's sophisticated, high-tech lounges might entice visitors to eventually become customers. Imagine visiting a NIO house multiple times, enjoying the comfortable sofas, the well-crafted ambience, and perhaps indulging in a premium coffee or snack before long. You might start considering buying a NIO vehicle. Additionally, this move allows NIO to generate revenue beyond car sales by expanding its offerings in food, beverages, and other premium experiences. Of course, this open-door policy does come with potential drawbacks. With unrestricted access, there's always a chance that individuals who have no intention of buying a NIO vehicle, such as elderly passers-by or casual visitors looking for a comfortable place to rest, could take advantage of the facilities. However, NIO seems willing to take this risk in the hope of fostering a broader community and enhancing its brand appeal. Now, let's return to the financial aspect of today's big news. NIO China has issued an additional 5% of its shares in exchange for a 2.8 billion RMB investment, equivalent to approximately $364 million. Interestingly, the investors behind this funding round have strong ties to the government, indicating that China remains deeply invested in NIO's success. This strategic backing comes on top of existing subsidies, which range from 6K to 10K RMB for customers purchasing NIO vehicles with battery swap capabilities. Breaking down the numbers, a 5% stake in NIO China being valued at $364 million suggests an implied valuation of around $7.7 billion for NIO China as a whole. Given that NIO Inc's current market capitalization sits around $9 billion, this deal appears to be a highly favorable one for the government-backed investors. It's a lower valuation than what one might expect, especially considering NIO Inc. holds approximately 90% ownership of NIO China. By that logic, NIO China should be valued closer to $10 billion+, meaning that the company may have secured less funding than it ideally could have. Nevertheless, in the world of business, any financial injection is beneficial, especially when it strengthens operational liquidity. To put this into perspective, NIO typically operates at a financial loss of around $700 million per quarter. This means that the recent funding injection will likely sustain operations for just over half a quarter. While this might not be a long-term solution, it does provide a critical short-term boost to NIO's cash flow, allowing the company to push forward with its production and expansion plans. Interestingly, this ongoing pattern of fundraising suggests a gradual dilution of NIO Inc's ownership in NIO China. Over the past few years, we've seen NIO China receive increasing amounts of external investment, and its ownership structure is evolving. This raises the possibility of NIO China pursuing a domestic public listing in China, a move that was once anticipated but put on hold when NIO Inc. increased its stake in the subsidiary. Now that NIO Inc's ownership in NIO China has fallen below 90%, the potential for a Chinese IPO is back on the table. If NIO China were to go public in China, it could open up access to substantial capital from Chinese investors, who currently cannot invest in NIO Inc's US-listed stock. In China's stock market, short selling is not permitted, which often leads to higher valuations and greater investor enthusiasm. If NIO China were to be valued at $20 billion post-IPO, NIO Inc's majority ownership would imply that it should command a significantly higher market cap than its current $9 billion valuation. This could be a game changer for NIO, boosting its financial strength and market perception. Increased valuation in China could translate into positive momentum for NIO Inc., benefiting shareholders worldwide. Essentially, if NIO China thrives and sees its valuation soar, NIO Inc. will likely follow suit. In summary, while the latest government-backed funding deal might not have maximized the potential capital infusion, it does demonstrate continued governmental support for NIO, reinforcing confidence in the company's future. Additionally, the decision to open NIO Houses to the public signals a shift in strategy aimed at expanding consumer engagement and potentially increasing vehicle sales. With a possible IPO for NIO China on the horizon, the company's path to greater financial stability and growth seems clearer than ever. Now, all eyes are on NIO's execution in the coming quarters, particularly as it works toward profitability by the end of 2025. Let me know your thoughts in the comments below. Do you think opening NIO Houses to the public is a good idea? And what do you think about NIO China's potential IPO? Let's discuss. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.